The following is for information purposes only and should not be considered investment advice. All opinions and views expressed by the contributors to this podcast are in a personal capacity only. They do not represent the views of Progressive Equity Research or any other organisation mentioned in this podcast.
So, Thursday, 18th of July. Jeremy, welcome back.
Hi, Gareth. Yeah, good to be here.
And it feels like it was a pretty tumultuous week over the last 7 days, starting from the least expected to the most predictable. Trump nearly being assassinated. Trump then dusting himself off very quickly and picking a new running mate in J.D. Vance for the vice president's slot. Closer to home, obviously, we had the early signs of activity and lots of activity from the incoming Labour government, most of which was quite predictable. And then sadly, most predictable of all was England falling at the last hurdle in the football, which was sad to see. But
it wasn't coming home, was it?
No, it wasn't coming home. But they did do pretty well. And I'm once again proud to be called Gareth. For a while it was in doubt, but I think Mr. Southgate did a good job, and hopefully the next manager can take the team even further. But what do you think of what's gone on, especially in the States and then perhaps closer to home?
Well, much as I'd like to step back from politics and just focus on economics and financial markets, it's impossible to do that at the moment because the events in US politics are just getting extraordinary and potentially very consequential. So, as you mentioned, the near miss, the assassination attempt on Donald Trump transforms his chances and makes him as close as I think you'll get to being nailed on to being the next president. And the consequences of that in the short term has become called the Trump trade. Yield curves have steepened in expectation of increasing and increased fiscal deficits. And the dollar has weakened, partly due to lower rate expectations, but also because his new running mate, J.D. Vance, is in the camp of devaluing the dollar.
Right.
So I think his choice of Vance as his running mate is significant for many reasons. He's only held elective office for 18 months and he's 39 years old. He's also now going to be the odds-on favourite to be the next president of the United States from 2029. And if that's the case, we could have a decade and a half of MAGA. And I'm not saying that's definitely going to happen, clearly, but I think you can see how this might play out. And one has to seriously contemplate now what a MAGA regime over the long haul could be.
Yes. This time last week, we'd have been thinking that if the Democrats could get their act together and potentially bring in a replacement for Biden, they'd have had a pretty good shot at winning. And now everything's changed in the space of literally 7 days. Very consequential.
Yeah. So I was aware of J.D. Vance before the announcement came. I didn't know much about him, but neither did many Americans. But he made his name in 2015 with his book Hillbilly Elegy, which preempted Trump's first term. And as been widely reported, he was a late convert to the Trump cause. And I think it's a case where the apprentice is more ideological than his master. So this is interesting in that Trump and his version of MAGA is rhetorical but not ideological. And Trump himself is a hustler and will change his tune according to the mood he's in and what he figures his best interests are in that moment. I think Vance is a much more ideologically driven person. And I think understanding him and his ideology is well worth it because, as I said earlier, this could be an ideology that shapes US politics for some time to come.
So what is that ideology and what do you think it might do both to the US and potentially much more broadly?
What it isn't is free market ideology of Reagan, nor is it the neocon foreign policy of the Democrats and the Republicans of recent decades. His is an ideology more aligned to European nationalism of Meloni and Viktor Orban, i.e. more measured in foreign intervention from a military perspective, but very protectionist on trade policy. And I think his rise to the anointed successor to Trump is also related to the fact that he's a protege of Peter Thiel, who's a venture capitalist and the first external investor in Facebook. And it was through his relationship with Peter Thiel that Vance enjoyed a short but successful career in Silicon Valley. So Thiel, almost single-handedly of the Silicon Valley billionaires, backed Trump in 2016. He kind of stepped back from Trump in 2020. But their man is J.D. Vance, and Thiel, through his PayPal mafia connections, he worked at PayPal with Elon Musk, David Sachs, both of whom have swung behind Trump this week. And I think what we're seeing here is the combination of factors is that they've got their successor in J.D. Vance, who they're supporting, but the assassination attempt on Trump, I think now makes it more socially acceptable to be a Trump supporter. So they've all got their checkbooks out.
Right. Yeah.
And the numbers are huge. So along with the names I've already mentioned, there's Mark Andreessen and Ben Horowitz. And I know Ben Horowitz has previously been a Democrat supporter. So has Bill Ackman, who's also got his checkbook out this week. So if Trump doesn't win the election in November, it's not going to be through lack of financial backing.
Yeah. So Trump's near assassination makes him, ironically, more acceptable to back.
Yes.
And the people that can do the big backing in terms of dollars, they've now got their guy in J.D. Vance who can make Trump's rhetorical activity, they can turn that into proper right-wing ideologically based behavior with impact on markets. What do you think Vance might do?
I'm not sure this left-wing, right-wing thing holds up anymore. He's quite pro-union. He's quite anti-big business. He's pro-antitrust. He's pro-working class America. I think Trump has given lip service to that type of policy, but never delivered on it. Mm-hmm. And he's only going to be vice president. Trump could marginalize him. So I don't want to. I guess it's wrong to make too much of this. He's a very different vice presidential running mate to Mike Pence. And I think, again, the assassination attempt, you can see it. It's changed his demeanor. He feels bulletproof. He feels protected by someone upstairs.
That's what they're saying, isn't it? So, yeah. So Vance, he'll be very protectionist. He'll be America first, sort of Republican in more than just name, trying to protect or build jobs in the States with devaluation of the currency if necessary. Trump has been talking about what he might do to the Fed, and presumably Vance would be happily going along with that. So it could be a very, very different playing field.
Yeah, the downside here is that devaluing the dollar, weaponizing the dollar against China and foreign competitors and developing a more mercantilist trade policy risks policy mistakes and overshoot that undermining the dollar as the reserve asset. And it's not a surprise that along with dollar weakness in the last 7 days, gold has now gone to a new all-time high. And that is a signal about concerns of dollar debasement and the longer term implications for the purchasing power of the dollar. That's quite noticeable and could be an ongoing trend. And as far as equity markets are concerned, several things seem to have weakened the Mag 7, the NASDAQ 100, and we've seen the beginnings of quite a discernible dispersal trade that we've talked about before. There's been a very strong swing in the States from large cap to small cap. The Russell 2000 small cap index has outperformed the large cap stocks more than in any weekly period, I think, ever recorded. So this is a significant shift, and I think it could have much further to go.
That dispersal trade we've talked about before, as you say, but it's very significant if people are going to be allocating capital much more away from their perceived safe havens of the massive US tech stocks, then that would hopefully spread out to other geographies, including the UK.
Yes. In a market cap context, the FTSE All-Share Index, the UK equity market, is what most Americans would call small caps. So any dispersal trade on a global sense, I think, would continue to be good news for the UK. And that does seem to be the discernible trend in the UK. I mean, it's hard to say in the space of a week, but a weaker dollar eases financial conditions for everybody.
Yeah. Okay. So massive political changes with some pretty dramatic, even very short-term moves in the market, but interesting to keep an eye on those. What else has gone on, sort of the macro?
China's reported some weaker than expected GDP data for the second quarter, which were quite a bit lower than expected. So the China slowdown still seems to be something that is troubling the rest of the world. We've had profits warnings this week from at least 3 luxury goods companies. We've had a big profit warnings from Burberry and London this week. We've had Hugo Boss and Richemont both guide lower, all 3 of them highlighting weakness in demand from China. In the US, we've had Jay Powell say that inflation is heading in the right direction and that the 2% target is in sight. Back in the UK, we've printed another set of monthly inflation data on target at 2%, which seemed to disappoint a few people. But the PPI measures that were produced at the same time indicated further deflationary pressures up the chain. So I don't think we're in any risk of short-term losing control of inflation in the UK. And today we had unemployment data, which was pretty static in May, unchanged at 4.4%. And we had wage growth showing continuing signs of slowing, albeit at 5.7%, still significantly above the rate of inflation. So while it lasts, if you've got a job, people should be feeling better off. We've got 3.7% real wage growth at the moment. So, yeah, they're the main sort of macro things I've seen. Obviously, as you mentioned, we've had a new Labour government, which has just got on with things, really. And we've obviously had the King's speech to give us some outline of what they're going to be doing. But most of the headlines seem to be taken up by what they want to do in terms of planning controls and house building.
Yeah. And I'm sure that'll feed through to activity in due course. And hopefully the house builders will see a strong rise in activity and just removing the handbrake, which has been the planning process for a number of years by the sounds.
If not decades. Absolutely. Yeah.
Yeah.
What else in the UK have you been looking at this week?
Yeah, it's small beer in comparison to those tumultuous events on the global stage. But yeah, some very small company news from the UK. In terms of progressive clients, we've had the initiation of coverage on a business called Secure Trust Bank, which is a traditional bank funded by retail deposits, but they've been majoring on their strong use of IT or general technology skills, lending into 4 key markets. And if they hit their targets, which we've described as ambitious but achievable, then I think it could be a really interesting story. And it's a stock which is trading at below half of net asset value. So there's an interesting play there. I think it's well worth a read, Mike Trippett's note from this week. And we also this morning had an update from Pharos Energy, which has been describing production bang in line with the middle of the range of their expectations for the period, and good news both from Vietnam in terms of licenses and license extensions, and from Egypt with some drilling programs that they're getting underway with. So some positive news from Pharos Energy there as well. And what about next week? Hopefully a slightly calmer week than this one. But what do you think on the horizon?
Well, that's right. I suspect on the politics, before leaving the politics, I think we must hear at some stage that the Democrats have decided they have a better candidate than Biden, a candidate who has got more chance of showing some muster against what Trump has been talking about this week. Yeah. And even if it's not to save the presidency, to save the Senate, because I think the risk of a Trump landslide is that he has a clean sweep of Congress and the presidency. Yeah, but next week on the economic front, it's relatively quiet. We've got consumer confidence data from Germany on Tuesday, which I think is probably not going to be great reading. We've got some UK PMI data for Wednesday, and the expectations are for these PMI data to be expansionary, all above 50. So keep an eye out on that. We've got US Q2 GDP data, which should show some stabilization from the 1.4% growth last quarter to 2% this time round. And then on Friday, we've got the Fed's favorite inflation measure, which is their PCE inflation figure. And that should map what the CPI data revealed last week, which is just a pretty flat month-on-month, year-on-year data release. So probably not a lot to get people excited about in terms of the direction of interest rates in the short term.
Yeah, fingers crossed for a quieter week. I'm interested to see the way the Democrats respond, but no, understood. Well, huge amount there to get our teeth into. So thanks very much again, as always, for your thoughts on it. And we'll catch up this time next week.
Okay, speak then.
Speak then.
Brought to you by Progressive Equity.